Can we start with 10-year yields? Because this was recording on January 7th. We had a interesting auction today that went pretty well, better than I thought it would, but not great. A lot of people were upset with it. Yields have gone nothing but straight through the roof since the Fed began its historic easing cycle, trying to bring rates lower. 10-year yields have gone from 4.6 to 3.6 to 4.7. What the hell's going on, Bobby? You got a fundamental opinion on that first or no?
These guys were talking about how the banks are forcing the 10-year higher so they can keep mortgage rates higher, even though the Fed is aggressively easing. So there's three things wrong there. Number one, banks don't force mortgage rates anywhere. They relate them to somewhere between the 10 and the 30 year. And the 10-year yield has been rising, as you mentioned. Number two, the short end of the curve is not what mortgage rates are based upon. And the Fed is not aggressively easing anymore. If you look at the CME Fed Watch tool, as of today, it is January 7th. So when you're watching this, it's a week or so later. But literally, the market is only pricing in now 25 basis points of rate cuts, and they're pricing in it in June. And it's not even a very high probability price in, right? If you look at the sort of probability tab that sits on that CME Fed Watch tool, it's a June cut. It's only at 44.8%. Unchanged is at 32.9%.